Hello, this is Chapter 4 practice problem that we're going to work on today. This is probably the longest of all of the end of chapter quizzes for Chapter 4, and the reason why is it takes everything from chapters 1 through 4 and puts it into one single quiz. And so this practice problem is going to take a while to get through, but we'll surge through it as best as we can. We start with Nozomi. They created a travel agency called Adventure Travel, and then there's a number of purchases or activity rather that happens throughout April, the month of April. Here's the chart of accounts that we're going to be using. Underneath are requirements that we'll be fulfilling throughout the video here. So let's take a look. The first one, use the balance column format to set up ledger account listed in its chart of accounts. And I'm going to do a couple of things. I'm going to actually set up this type of a format, which is a worksheet format. And the accounts that I have listed here are all the accounts that are in the chart of accounts here. I am also going to be referring to T accounts, and I also have all the accounts set up here that have been set up in the chart of accounts. Okay, so I will be doing both. Alright. Says here, prepare journal entries to record transactions for April. Post them to the ledger accounts. The company records prepaid and unearned items in balance sheet accounts. So you can actually see that there are some categories that might have something to do with that in here. Okay, but we'll talk about that. In fact, here's a prepaid insurance. There's a prepaid right there. I don't see unearned income anywhere, so may not be in here. Okay, very well. Alright, first order of business. We're going to start doing journal entries here, starting with April 1. Okay, Nozomi invested $30,000 cash and computer equipment worth $20,000 in the company. So we're going to be increasing cash and we're going to increase computer equipment. And it's actually called computer equipment right here in your chart of accounts, so you have that as a reference to see what exactly it's called. So I'm going to do a debit to increase cash and a debit to increase computer equipment. And that's going to be for $30,000 and $20,000 each. And I've got a credit going for the total of $50,000. What account is that going to go to? Well, this goes all the way back to Chapter 1, actually. When they put money into their company, then you're going to wind up increasing the capital account. The capital account is literally their net worth. So the credit's going to go to capital for Nozomi. Okay. April 2nd. The company rented furnished office space by paying $1,800 cash for first month's rent. Now, in the past we've hit like a prepaid rent, but that's if they wind up paying for multiple months in advance. They're only paying for 1 month, so we're going to go ahead and expense it for the month. Okay, so I'm going to hit rent expense, and that shows up here in my chart of accounts, rent expense, and any expense is a debit. So debit rent expense, and I'm going to credit cash for $1,800. Number 3, the company purchased $1,000 of office supplies for cash. So on the 3rd of April, I paid out cash and I have purchased office supplies. So that's office supplies being an asset. An asset is increased by doing a debit. So I will debit office supplies. And I'll credit cash. For $1,000. On the 10th of April, says here the company paid $2,400 cash for the premium on a 12-month insurance policy. Coverage begins on April 11. Okay, so again, this is a prepayment. So we're paying for multiple number of months, so 12 months policy, 12-month policy. So this will actually hit an asset account, and that is prepaid insurance. And we have prepaid insurance here in our chart of accounts. So that's actually kind of a dead ringer what account you have to hit, okay, just in case you're wondering. Prepaid insurance debit. For $2,400, and we paid cash, so credit cash. Alrighty. Okay, next one. On the 14th, the company paid $1,600 cash for 2 weeks' salaries earned by employees. So we don't have to do any calculation. They just said $1,600 cash, and we're going to wind up hitting salary expense. I believe it's right in here. Yep, there's salaries expense. So any expense is a debit, so I'm going to debit salaries expense. For $1,600, and a credit to cash. Next up, on the 24th, the company collected $8,000 cash on commissions from airlines on tickets obtained for customers. Okay, this is money that's coming in. They're a travel agency, and the travel agency winds up making their money off of commissions. So if I look down here at the chart of accounts, I have this one called commissions earned, okay? And so they received cash. So cash is an asset, and I'm increasing cash, so I'm going to debit that for the $8,000. And since commissions earned is a revenue, I'll do a credit because revenues are a credit balance. So credit commissions earned. Okay, next, on the 28th, company paid $1,600 cash for 2 weeks' salaries earned by employees. Oh, so we have another payday. It's going to be exactly the same as what we did right here, okay? So I'm going to wind up hitting salary expense and a credit to cash. So here we go again, same entry actually. Too bad this is not an Excel spreadsheet. I could just simply do a copy and paste instead of writing it all out, but them's the breaks. Next, on the 29th, the company paid $350 cash for minor repairs to the company's computer. So if we look down in here, it says minor repairs. They do have a one here called repairs expense, and that's what you want to hit, okay? So if you're not quite sure what to call the particular account, take a look at the chart of accounts and see if something fits, okay? In this case, repairs expense. is going to be a debit. For $350, and credit goes to cash. Okay, next one. Company paid $750 cash for this month's telephone bill. So we have down our chart of accounts telephone expense. There's your telephone bill right there. So let's do the 30th here. Scoot this up a little bit. Telephone expense is debit. Credit to cash. Excuse me. For $750. Okay. And then I need to continue on the next page. Last one, Nozomi withdrew $1,500 cash for personal use. So on the 30th, we hit right here on the, looking at the chart of accounts, here's the withdrawals account for J. Nozomi. So I will debit withdrawals. Even though it is not an expense account, it acts like one, and that you will debit that account. 1,500, and credit to cash for 1,500. Okay, that's that. It says here, do journal entries and post them to ledger accounts. So the ledger accounts are going to go right here, and I need to go through all my journal entries and transfer them from here to the ledger accounts. And I will go by looking at the first item. I'm going to look at cash, and I'm going to find every cash entry that's in here, but I need to make sure that when I do this I put cash and I observe whether it is a debit or a credit. If it's debit, I put a debit on the ledger account, and if it's a credit, I'll put a credit on the ledger account. So I keep like to like. Okay.